TGIF Warriors, how's everyone doing today? Vince and William, team, March 1st, everyone. I'm planning to have a great month with everyone here. All of our FX community and family, let's have a great March. Everyone ready for it? Give me a Y if you're ready for a good March. What they say, March goes out like a lion. Let's be lions. Okay. All right, so everyone knows I was bearish crude. And are you there? I hear somebody.
Oh, that's me, dude. Sorry.
Okay, that's all right, bro. So we have this big break on the Trump tweet that oil prices are too high, and thought I had it. Thankfully, I teach people to take profits too soon. Believe in probing and protecting. Okay, so there was, decent pips on this move. Then 61.8 tried it, and as you can see, it just blew right through 61.8. Then it gave the 78.6 guys a little breathing room, and then we stalled at 88.6 for just a little bit, and then went for the grand prize, which is new highs, stops over this high, which was 57.39. We took it out by 21 points. And here we are, 40 pips underneath the previous high. So I might be talking my book. I'm going to be real interested in hearing what Steve has to say. And I know there's no confirmation to get short here, but right now it's looking to me like it could be a stop hunt. Of course, it needs to break lower to build that case, but to me, it looks like it. And despite this big recovery, we're not much higher on the week in the crude. And if it is an irregular B, that this was A, and what's unusual about regular Bs is they take out the high of A and really, screws everyone up while it's a breakout. So we'll see. If it's 1.618 of this, you could still make a case for a $4 break to 53. Of course, we start closing into new high ground later in the day. Then you have to be open to higher levels, 58, 60. So far, we're getting the potential of a reversal day. So I'm going to give it a little more time and see if this plays out. Something else I'd like to get the team's view on is I remember quite some time ago, I forgot who it was, who was talking about a 112 yen. And that's going to be an area of interest for possibly when this rally ends. I think it was, they were talking about it down here. So we've gotten to 112. It looks like a breakout. Not sure what it measures, but, we're back to this major pivot point here at 112. So we'll see what happens there. What's strange is with the strength of this rally, I'm surprised yields haven't even done better than they have. So I don't know, the US dollar yen kind of has a life of its own, but you would have thought that yields would have already been, 285, 290. They look good. I mean, they held the space. They're coming out of here. So maybe we are still heading up towards 281, 290. But comparatively to the yen, we should already be above these levels. But, markets move at different times. It's like a fuse on a cannon. You have the long fuse, you have the short fuse. But this is starting to look like 290 could happen. So we'll see what goes on there. And I just want to wrap it with the S&Ps, because despite this move that we've had in the energy, and you have to admit, everyone, that they've been kind of running together, this rally in the S&Ps is a lower high. I'm not saying that it won't make new highs and take out 28.11, but it's just a little bit more over 61.8 of this decline here. So, it may not be a bad place to probe or, raise cash and have your stops, give it some tolerance over the early low of the week. and see how things finish on Friday or early into next week. But normally with this much, every dip was bought all week. I watched it, because have some bearish NASDAQ ETFs on, and they bought every dip. They keep buying every dip. In fact, the NASDAQ's much stronger, almost at new highs, and the Dow is also much weaker. So NASDAQ's been leading the way, which, surprising me with how FANG has really been under pressure and not close to recovery levels, except for maybe one or two issues. So that's what I'm looking at. I'm looking at the oil as possibly being a breakout, fake out, stop hunt over previous highs, see how we close, and the potential that there's a failing rally here in the S&Ps. It doesn't have to happen today, but bears might want a toe in the water because you never know when something's going to happen. Could follow through into next week, or it could start happening today. So with that being said, dollar mixed here. Pretty good recovery yesterday. 1, 2, 3 bottom. It wasn't my kind of setup because the RSI actually did not diverge down here in the dollar. So I have a sideline view on the dollar right now, but leaning more towards you have to give the benefit of the doubt. Let's look at the weekly on it. It's still a red candle, but it held where it had to, I think. Under this week's low in the dollar, I think you could go with a short for lower levels, but as long as this low holds, you have to give the benefit of the doubt to the upside. So we'll see. I know some people are talking we could go to 95.50 and still be okay, but I'm thinking that this low that we put in a couple days ago is pretty important. So looks like we need to close it back over this resistance, I think, and for sure back over this neckline that Steve had a head and shoulders top on, that we just, shook people out on it before reaching targets. Steve said objectives were met on this formation. So we start getting back over 40 and 60, then I think 97 is a layup and 99 is possible going into the spring, summer. So those are my guesses for today. But, something I really don't guess about, I teach that surround yourself with traders better than you. Could be Ping. And in a month, it'll be 2 years since I've done that. So I surrounded myself with talented, hardworking people with years of experience and many, all of them here, really years of success in trading. And just through osmosis, hanging out with these guys and gals has helped me have a better edge in the markets than I've had in my whole career. And you guys know I've been doing it for at least a couple of years. So, if it can happen for me, it will happen for you if you just invest a little cash and a lot more time into immersing yourself into this community. Guys, I've been around, right? A lot of you remember me from FX Street, and I've interviewed thousands of, at least 1,000 interviews I've done over the years. And you may say, well, Dale, you're not objective. You work with the guys, but I'm telling you that I've never seen a stronger team assembled in one place anywhere I've been in my career. So, if you think it's a pitch, that's fine. But most people who know me say, no, when I talk from my heart. I wear it on my sleeve. And I'm telling you guys that this is, doesn't happen all the time to put together, like sports. Every once in a while, they're on our YouTube channel, Hira. Okay, you could go to our YouTube channel. I don't know, I've probably done a couple hundred here in the last couple of years. You're very welcome. So, every once in a while, a great athletic team comes together, but it doesn't happen all the time, right? I mean, the New England Patriots, that's pretty unusual. But for a great team to come together at a certain point in time to serve and help people in the markets, I think this is the best one I know of and I've been associated with. So risk a buck, take a 6-month subscription, because you have to give things time to make a valid judgment. And that's it. So from the heart, best group of people I've ever worked with on a daily basis for this amount of time, whatever that means. Anyway, how you doing, bro? Hey, Blake.
Hey, good morning.
Hey, bro.
What's going on? Some nice words from the coach. So, hey, you know, I always get nervous when we talk about crude on a Friday. It's always a little nerve-wracking about trying to short crude on a Friday. But we do have some things that could move today. And actually, I'm gonna turn your attention over to because since we're talking about crude, and
is it because of Kudlow, Blake? Because Kudlow talked up the market saying, "Oh, the Chinese have come a long way, and looks like they're going to have an historic deal." Is what Larry Kudlow.
Well, I think. Well, first of all, I think everybody's expecting some sort of deal to be put together. Right. Once a deal is announced, remember, that's something I've been kind of waiting for.
You have,
because I want to take advantage of the upside that we might get as a result to some sort of announcement. However, there's when a deal is announced, that the U.S. isn't going to stop there. They're going to go. They're going to start attacking Europe, and then also Japan. And matter of fact, this article is pretty interesting in the Nikkei Asian Review. U.S. to press Japan on currency trade talks. One of the reasons why the U.S. dollar Japanese yen may be breaking out right now is because people think that the U.S. is going to turn their attention to get Japan to weaken their currency substantially, and where we could end up seeing the U.S. dollar Japanese yen, rally.
120s, 120.
Yeah, you could really see that type of move. We are above the 200-day moving average, and I'll tell you, I would not want to be short the dollar yen. I tried shorting the euro yen yesterday. I tried shorting the Canadian yen yesterday. Me
too.
Yeah, it wasn't. We got a breakout, and so now you have to imagine that the dollar yen is going to try to make its way back towards this 112, 114 level, and this is all really key resistance as we move forward. And now the only thing that's going to turn the tide at this point is if we see a move lower in equities, which can happen. Whoa, who was that?
I don't know.
That was Joe. I just heard Joe screaming. Here, let me. Joe, he just muted himself.
It's like a floor trader. I think he's trying to get a trade on.
I guess. All right. So anyway, you got to watch this dollar yen. This dollar yen looks like it could spike higher. And I wouldn't want to be, like I said, I wouldn't want to be short these. We've got a lot of momentum behind the dollar yen, the euro yen. The euro yen broke that channel resistance. The pound yen is just on fire. The Aussie yen's up against resistance here, but I wait for some sort of trade announcement before thinking about what to do with that. I'm more of a proponent of shorting the Aussie, so I'm not even dealing with the Aussie yen. If I've got all these yen pairs moving higher, New Zealand yen's moving higher, Canadian yen's broken above the 200-day moving average, and like I said, I tried to stand in the way here, just to, because it was a good risk reward, but you have to keep your stops tight in a situation like that. Now, a couple things. We were talking about crude oil. Shorting crude on a Friday is tough. Okay. It's going to be really tough. But if crude oil for some reason does move lower, I think we gotta keep an eye on the dollar Canadian. Now I'm gonna give you guys my battle plan with the dollar Canadian. I own some. Below 131, I'm wrong. Above 132, I'm really right. And above 132, we still have this big inverted head and shoulder pattern that's looking to play. But we do have Canadian GDP. So if Canadian GDP comes in below zero growth, which the market's looking for 0.1%. Well, it's actually flat, but let me make sure. With Canadian GDP. Yeah, we're looking for flat. If we come in below that today, you know, sub-zero print, you're going to see the Canadian probably get hit. That might be enough to take us back to 132. What's going to carry us above 132 is if crude weakens. Now, I'm not betting on that because the dollar, you know, the crude oil selling off on a Friday, you just don't see it that often. It's mostly bid on Fridays. Now, another trade that you got to keep an eye on in the event that crude does weaken is you got this this dollar MEX that's above the 618 retracement, and we break above 133. And you're going to see a little bit of a bullish move here in the dollar MEX. The dollar MEX has come out of its down channel. I do have a small core position in it. You know, banks are starting to look at Banxico as the Mexican central bank is possibly starting an easing cycle. And if that's the case, you know, I think Mexican interest rates right now are at 8.5%. I'd have to go take a double check that. But, you know, if Banxico starts easing, that could really soften the peso. And then, you know, again, you throw on a little bit of risk aversion, and you know, you get emerging market currencies getting hit anyway. We'll get a nice move up in the dollar MEX. So I'm hoping that that's going to continue to take place.
8.25, Blake.
Is it 8.25? I knew it was 8
Yes.
something. Okay, thank you. I just didn't. I don't have it in front of me. I had to go and look at it. Another development this morning is the euro. So the euro, I'm telling you, this euro is beyond, like, if technicals, you can just throw this crap. You know, there's no reason to even look at charts at this point in time. It seems like you know, you think you get a bullish move, then it reverses, then you think you got a bearish move where it's gonna, you know, give it back, and then it reverses. It is a really challenging market to try to trade, and I'm not trading the euro, so just so everybody knows. But we had some, you know, all the European PMIs, for the most part, the numbers came in better than expected. I mean, you're talking about, you know, Switzerland, Italian. I know Switzerland's not part of the Eurozone, but still, it's regional. Think regional. German retail sales came in better than expected. You know, the PMIs were not as bad as I thought they were going to be, and that has put a bid in the euro. Now, I don't care so much about the euro dollar. What I do care about is the euro pound, which I do have a core short position in the euro pound. So where the hell did my euro pound go? Oh, it's way down here. All right, here it is. So if you read yesterday's ForexAnalytix analysis on the euro pound, and I'll go to the daily chart just so you can see what I wrote, wherever it is. There it is. Remember, I do the basic technical analysis during the week for ForexAnalytix. At the end of the day, I write up the end of day analysis. So this is the euro pound. This is what I was looking for yesterday. Okay, and if you read the analysis from last night, with a divergent RSI, the risk of a move back to the 86.20 level seems logical, which could set up for a level for fresh shorts. That's the chart that I posted yesterday. Today, we are higher, as we're moving higher into, you know, towards 86.20. We went to 86.11. I started selling a little bit more above 86. But wow, look at the dollar Canadian. Wow, what just happened? What
GDP, I think.
No. That's in 10 minutes. Something just happened.
Oh.
I don't know what spiked up, but I just took profits in my dollar Canadian. I did because it's like, well, this is a gift ahead of GDP. If post GDP, if we break 82, then you know, then we got something here. But yeah, I'm not sure why we spiked up there. And
crude is coming off quite a bit. It spiked up, and look at the candle.
Yeah, crude does look like it's coming down. So
I don't know why it did that.
No, yeah, I don't know why either. So I think there's something that came out, but I'm focusing on you guys right now in this one chart, so I can't really take a look around.
It's hard to trade and do a show sometimes, isn't it?
There is a chance that they just read our blog post, so you know they started selling crude. Huh?
Yeah, that was it. Yep, that was it. All right. So anyway, well, I just sold into that strength and I just took my profits off the table just because I was hoping that we would get a move like this ahead of GDP. Post GDP, I'll be more than happy to buy a breakout if we take out 132. But the dollar MEX is making a move. We are just hold on. Let's see. The dollar MEX is trying to follow along. Dollar MEX is at highs on the session. See if that thing starts to move a little bit.
Maybe there were energy inventories that gave
well, I don't think so.
Yeah, what's the difference? More sellers and buyers.
Right. I'll just take some profits in my dollar MEX just on my core position. I'm taking advantage of these spikes because I don't know where they're coming from and why. So if I have a reason and I know why something's happening, I'm more apt to.
It came out early. That's what our community is saying. The GDP was negative, and it was released early in Canada.
Oh, okay.
Now we know.
Oh no! Everybody thinks that there might have been. I don't know if it's speculation.
You remember, by the way, like some time ago, we had Canadian data leaking all the time. Perhaps
yeah, no, I agree with that. I know for a fact Canadian data gets leaked. Well, I don't know for a fact. I'm 95% sure it gets leaked.
Who told you that? Someone on the plunge protection team?
No, you would see it. I mean, for the last several years, you know, you would be in a trade and you'd be like, what the fudgesicle just happened? And then, you know, you knew it happened just a couple minutes beforehand, and it's like, okay, well, you know, I know the data is going to be bad or good based on the price action 2 minutes before the data, and without you know, it would happen every time. And then right after the data would come out, you'd be like, oh, well, you know, of course that was bad because, you know, the Canadian was already reflecting that, or vice versa. So anyway, I took some profits of my core dollar MEX up there. I took the dollar Canadian off when it hit 82, and I'll reestablish it following the data. See, you can see, look, it's coming right back down again. Anyway, but I will point out, because you did too, Coach, that the crude oil is looking a little weaker right now. So that's probably a contributing factor at the moment, I would assume.
Yes. On the 1 hour, it's sitting right on the 50-day 50 moving average. It cracks at 630s next.
Yeah. So. Well, and you know, one of the other things that, you know, we can just kind of look at here is you got nice false breakout above the highs in crude. So you take this little trend line here and you do it like this, and then you start breaking the lows here, and then, you know, you should get a move back down to support. Then that's going to feed in. Wow, look at this dollar Canadian still spiking. Wow, we're going right up to. We're gonna go right into resistance with this GDP number. Yeah, that GDP must have came in pretty weak. Wait, slow to. I'm reading something. It looks like it did come out early. I'm reading GDP, income, expenditures, fourth quarter 2018 growth in real domestic products slowed to 0.1% in the fourth quarter, the slowest pace since the second quarter of 2016. Real gross national income fell 1.0%, largely owing to lower export prices of crude oil and crude bitumen. Final domestic demand was down 0.4% as investment continued to fall. Wow, it's some pretty dire numbers there, if that's the case. So, yeah, okay. Pretty weak numbers already ahead. The question is, what do you do now that you're hitting, this 132 level? I do think that this whole area is going to be really, really critical. I would not be, me personally, I can't be buying into this number. So what I'm going to do now, I'm just going to tell you guys how I'm playing this in the next week, is I'll wait for a breakout, then I'll buy a retest. This is where I buy right here. Going into next week, I can't deal with it now. I can't chase it up here. So that's not my MO. But anyway, wow, got some activity this morning. That's good, right? Yeah. We get some activity ahead of the data. So with that being said, I'm going to pass it over to Steve. And I guess Stelios is skiing in Greece. How does that work? Does it work very similar to Phoenix? People don't think that. I mean, you guys got little snow bunny hills. At least we got mountains here. People don't think that the desert has mountains, but we have mountains.
Aren't there any mountains in Greece, Steve?
Looks like Steve went to go. He went to go pee.
No, I'm here. So ask again if there are mountains. Yeah, of course.
I've seen your ski mountains in Athens. I've seen the ones north of, a couple hours north of Greece. I mean, you guys don't really have mountains. I mean, it's not real. I mean, it's.
Yes, but keep in mind that we have the most famous mountain in the world, Olympus.
Yes.
Right? Zeus lives on top of it.
That's true. Good point. All right, you win.
What's rent up there?
All right, guys. Well, hey, I'm gonna
have a good weekend, Blake.
Yeah, hey, TGIF,
Blake.
Guys.
Please. Okay.
Steve.
Hey, how are you, Coach?
Good, bro.
Just a fast comment on the U.S. I have a lot of things to talk about today, actually. I was having a good look before, so we have things to talk about. I just want to, since we just got Canadian data, I want to explain that, in my opinion, there is a very high chance that we're still in a triangle here, which means that despite this rebound here, we're still in the middle of this triangle. So I wouldn't be really jumping the gun, looking for more upside unless we break this trend line. I still think that there is a decent chance that we're going to get another push lower before higher. But regardless, doing something in the middle of the triangle makes no sense. There is no risk reward here. So, you either trade the breakout one direction or the other, or in one direction if you really prefer, or you feel better about one direction. So having to do with crude, if you remember yesterday, I said that in my opinion, there is still no trade in crude because in essence, we are trapped in the 55 to 58 range. Today, we almost made it to the 58 level. We made it actually to 57.70. And yes, if we do close negative despite pushing to new highs today, and especially considering that it's Friday and there is the old adage that, never sell crude on a Friday because, obviously during a weekend, you can have surprise events, and 90% of the times that you have a surprise event, it's, crude positive, right? So you might open like with a gap higher on a Monday. That's why they say never sell crude on a Friday. So let's see how we close the day. But, a push to new highs and closing negative is definitely not going to be a good sign. We've already seen anyhow some signs of momentum loss, but as I said, as long as we remain above 55, you need to be respectful of the fact that this move higher that started in Christmas time, in essence, is still. We got personal spending data, by the way. Let's have a look. Personal spending down 0.5%, with expected being minus 0.2. So that was worse than expected, without question. The rest more or less in line. So yeah, we got that USD data just coming out. Let's see if the market reacts to that. So I think this is the situation with crude and USD CAD, which is obviously highly correlated to it. Before we go to more of the FX pairs, I wanted to show at bonds, because you remember we've been having these conversations about what the bonds are doing here. So we were talking, and actually Grega, the last time I was here, not the last time he was here, because he was also here when I was away, so I'm not sure what he said, and if he even had a look at the bonds. But if you remember, we had a debate. We were uncertain if this is a triangle up here, the whole formation, or perhaps the second case scenario, that perhaps this was like an ABC, with A being this, B being the triangle, C another leg lower. So now it seems more likely that this second interpretation, an A, a triangle, B, and the C, is likely. It doesn't look that clearly obvious on the 10-year treasuries, but if you go,
10 years look like looks pretty obvious to me.
But
that'd
if you
about
go
285, 290.
Yeah, but if you go to the yields, here are the yields actually. Sorry, here are the yields. If you go to the yields, you'll also see here a confirmation, because yields have been breaking to the upside at the same time. So yeah, perhaps this is the interpretation here as well. So this might be the triangle in this case, this one.
Yeah.
Right. So another leg higher, something like this, right?
Yeah. Yeah.
And then lower.
I think that's what the yen has been saying.
Yes, it's very likely. And if we have at the same time a look at the bunds, what do you see here in the bunds? We had some distribution up here. Initially, it looked like a triangle, so I was expecting what I had said, and this is bad that it didn't play out like that, because I would have actually taken the trade, is that I was looking for one more thrust above this consolidation, likely to test the 161.8% extension of this last bearish leg. And that would have been a nice risk-reward short, because we also had the all-time high being at 168.40. So, shorting there, you have quite a well-defined stop loss, let's say above 168.50. And then you could be looking for a pullback towards this 163.80, 164 area. But we never got that last thrust higher, and we seem to be breaking down below this ascending channel that was actually containing price action, this uptrend that started at the beginning of October. So 5 months of an uptrend. They seem to be breaking. Yesterday we got a breakdown, and today we don't seem to be pulling higher. So as it seems, we are actually going to confirm this move lower. So bonds do seem like they want to push lower from here, at least for a corrective move, before we see a continuation higher, which also means that might prolong a little bit some risk of move, because we know how tight the correlation is between bonds yields and risk. So if we go to the S&P, and then I'm going to switch to metals and currencies, because we have some things to see here there as well. S&P, as I was saying yesterday, on one hand, undeniably has lost momentum ahead of this key area at 2812. But on the other hand, it's also undeniable the fact that it's holding out, very well, considering the huge move higher that we've seen with literally almost no pullback. So, you have to respect both facts, right? I mean, we've lost momentum, but the fact that we failed to break down says that there is still a risk for another push to the upside before we actually see lower prices. In any case, I'm monitoring this ascending wedge from an Elliott wave perspective. It's a nice ending diagonal likely. There is also some RSI divergence here, not something to write home about, so not something that I would judge to be very reliable yet, because it's very slight. But this is what I'm monitoring, because there is no arguing that S&P is the benchmark. It's the most broad of the popular indices, so it's worth monitoring. If you want to monitor one index, that's the one you should be monitoring. Now, on the other hand, the DAX kept pushing higher and actually tagged earlier today this inverted head and shoulders formation target. So this inverted head and shoulders formation that we had formulate at starting like December and finishing up like mid of January, broke out, came down, retested the broken neckline, finally actually got completed. And as I had said, since we formed this inverted head and shoulders formation, if we actually do manage to tag the target, then we're going to be getting rather close to a very, very key area, and that's the 11,800 area. Why is it key? First of all, it has been support and resistance multiple times. Second of all, it is the neckline of this huge head and shoulders formation that we had in the DAX that almost made it to the target when we actually pushed lower. It didn't make it to the target, but it came rather close. So I have absolutely no doubt. Plus, keep in mind that the 200 daily moving average, as you see, is slightly higher, and for every day that passes, it's converging to that area. So very likely that in most likelihood those two will actually coincide in a few days' time, which means that this is going to be a very strong confluence of resistances. So I don't doubt that we're going to see at least an initial reaction from this 11,800 area if we tested, if not a rejection. So it remains to be seen. So I wouldn't be jumping the gun here, not unless we clear these areas. And I think that that makes things quite clear for the DAX. On the other hand, the FTSE has been relatively underperforming. I was monitoring. I had shown this before I left for my trip, this likely ascending wedge. But on the other hand, I have to say that the pullback so far has been orderly. So despite this underperformance, which is also due to the cable strength that we've seen come through the market. Don't forget that a strengthening currency acts like a headwind. Oppositely, a weakening currency acts like a tailwind. So in this case, that might be also in parts or in a big extent due to the cable strengthening quite significantly during the past few days. Keep in mind that this 7,100 area that we're currently testing, as you see, is an area of support. So I'm not I don't find it weird that we're seeing some kind of a reaction. Let's see if it's just going to stall temporarily, this move lower, or it's going to produce something more. Now, if we switch to the Nikkei, and then we can talk about the USD yen. If we switch to the Nikkei, you'll see that Nikkei is still holding within this ascending channel. Keep in mind that close to 21,900, we have a very strong confluence of resistances. It's this horizontal support resistance area, and the 200 daily moving average should be at exactly that area within like 2, 3, 4, 5 days maximum. So another nice confluence of resistance is there for the Nikkei. And if we switch to the USD yen, you'll notice that, in my opinion, the USD yen has not broken to the upside yet, because I'm monitoring this ascending channel. And, even if it does, I want you, we were talking yesterday about how important it is using both, now I'm using your words, coach, using both the telescope and the microscope. Speaking about that, keep in mind that I'm seeing here a huge triangle, right? You can see it here. So it's a huge symmetrical triangle, and even if we break above this channel, this triangle's trendline resistance is barely above 113, and every single day comes a little bit lower. So, I would definitely want to see a break above that area to start being more confident that, there is some kind of a, big bullish development in the USD. And until that happens, first of all, I have no position here. I didn't even intend to have a position here. It's one of the things that I'm monitoring, but I think that, there have been better opportunities than trying to trade the USD yen. And in any case, I'm still of the opinion that, the chances for another move to the downside for USD yen are rather significant. I don't know if it's going to happen from here or from the 78.6 or from a little bit higher, the 113 area, as we said. But I wouldn't be buying it yet. I know it looks strong at the moment. But as I said, you also need to keep the big picture in mind here, which would stop me from actually being a buyer. Now, you mentioned the DXY before, and I have to say, I said it yesterday as well, that the DXY has so far held the retest of this broken channel. You can see it here with red. So as far as I'm concerned, as long as we're holding this trend line resistance now acting as support, there is still the chance that we're going to see more upside from the DXY towards the 61.8 once again. Also previous double top roughly at 97, 70, 60 to 80 anyhow. Okay, so I think that, jumping the gun, in the DXY is going to be a little bit premature here because there is a bullish interpretation that's still quite viable from a technical perspective. Now, having to do with the Euro USD, I've literally, my mouth has gone dry from saying the same thing again for months, that this is an abomination and I won't really trade it because it's the best and easiest way to lose your money, since it just refuses to do anything.
Delete that chart from your.
No, I'm not going to delete it because at some point it's going to be useful again.
I know.
I know, but I know that you were joking. But it has definitely not been useful for a long period of time. I bet a lot of people have been scratching their heads or actually hitting their heads on the wall for making, an effort to do something with it.
Steve, I just thought if I deleted every chart I got stopped out of or was wrong, I wouldn't have any instruments on my screen. I'd be looking at maybe, I don't know, a music video.
Yeah, I think all active traders have lost money on all instruments. The question is, are you losing more or you're making more? Because for us traders, the only thing that matters is the balance. Your ego doesn't matter. I mean, unfortunately, very often it matters, but it shouldn't matter. That's what I'm trying to say. So your ego shouldn't matter. How many times you've lost or made money shouldn't matter. The final balance should matter. There are people out there that consistently are wrong like 2 out of 3 times, but they still make money. And there are people out there that are right more than 50% of the times, and they still lose money, right? Because it's all about, it's all about what kind of a risk reward you're going after, how early you take profits, which I've said before, in my opinion, one of the most misunderstood phrases. I'm not saying that it doesn't have an element of truth, but it has, it's very problematic if you take it as a principle, without putting rules on it, is that nobody went broke by taking profits early. You can actually go broke by taking profits early if at the same time you're letting your your losing trades run, right?
Done it. I have a new expression. It's called probe and protect. So you never know, Steve, when you're going to get the real big turn. But as traders, we probe the market, and I do believe in partial profits and then protecting it.
Oh, me too. In partial entries as well.
BE stops and sometimes scaling in, but probing and protecting, I think, are two real important things to do, because you never know when you're going to catch the big turn.
Absolutely. But if you're taking profits early, you need to consider to take that in account when you're actually calculating your real risk-reward ratio, right? Because you might say that initially I have a stop loss at X and a target at Y, but if you intend to take the whole loss at X, but you intend to take partial profits so you can be out of position at Y, that means that your target wasn't actually Y, it was less than Y. You know what I mean?
Yeah, R to R you're talking.
Yes, exactly. So you need to take that into account when making your calculations to see if something is worth it or not. I'm not saying it's wrong, it's not. Now, another pair that is at another interesting juncture is the Aussie USD. Aussie USD had another bad day yesterday, but it's so far holding this trend line support. So it's quite interesting to see what's going to happen from here. Obviously, a breakdown from this nice confluence of supports. You can see it's the 38.2 from the spike low to this high. It's also this trend line support. And I know that some people might even want to see this as a head and shoulders formation. But if you want to do that, then you're forced to have more or less an inclined neckline, which means that if you're looking at this as a head and shoulders formation, then you should consider a breakdown at lower levels than this, somewhere here. Okay. So any way you look at it, I want to see at least a breakdown from there before I can consider this an appealing short. And at the same time, this is something to consider. The Kiwi is quite far away from breaking down. You can see it's actually a little bit higher than the middle of this triangle. It's also above the 50 and the 200 daily moving average. Okay, so there is there is an obvious divergence between the two of them. Kiwi seems to be performing better. And at the same time, let's remember here that the Aussie Kiwi is still below this broken channel. So perhaps we're going to see some acceleration towards the spike low. Obviously, it hasn't been doing much lately, so probably not a good place to put your money. But if you want to do that, I think that as long as it remains below that trend line, it's quite a nice short. Now let's go to the metals, because all of them are quite interesting to watch. First of all, yesterday I was mentioning the significance of the 1300 level for gold. As you see, we're almost there. Actually, we're probing the upper part of this zone, because I don't like single levels, I like zones. So this zone is roughly like 1298 to 1304 or 1305. So we're actually probing the top end of that zone. And at the same time, silver is probing this ascending channels trend line. So I think that this is going to be an interesting day. It's going to be interesting to see if we're going to manage to hold those levels to close the week, or we're actually going to get technical events for breaking down. At the same time, if you remember, I mentioned yesterday that platinum has had an amazing run higher. Platinum has been for a very long period of time one of the weakest metals for a very long period of time, actually, and it has actually overperformed the rest of them during the past few days. And I said yesterday, though, that keep in mind that it's currently probing resistance, so we might get a reaction from here. We are getting this reaction from here, and what happens after some pullback is also going to depend from what gold and silver will be doing. Platinum hasn't done much since yesterday, but copper is clearly consolidating. So I would expect that this consolidation will bring more upside. As we said, the eventual target is roughly at 316, 315, 316, 316, 317, somewhere there. So I do think that it remains a good long, given the fact that we had this break higher from the rectangle. And as long as we remain above this 287 area, I think that this is the case. Now, at the same time, USD ZAR is making another attempt to break higher from this corrective, in my opinion, formation. I mean, it has all the corrective characteristics. So we're probing again the 38.2. I do think that there is, a high likelihood that we're going to punch through eventually, and this might be the case that eventually it's going to actually prove to be today or Monday or whatever, and retest the highs at the very least. So I think this is an interesting trade in the makings. At least from a risk-reward perspective, it undoubtedly is. I think those were the things I had in mind so far, but let's go through questions and I might remember other things I wanted to show. USDMXN, seeing the timestamp, I know that Blake covered it, so you asked quite early, so Blake did cover the USDMXN. I don't have much to add, but if you want my opinion on USDMXN, and I've said it before, I'm still not convinced that USDMXN is bullish. I'm seeing this as a corrective move, so an eventual break lower for a push towards 1860 and this long-term symmetrical triangles support looks quite likely to me. So in the short term, we might go higher and retest this channel, and it now confluences more or less with 38.2. But this price action doesn't inspire me to be long, on a medium-term horizon. I mean, I know that Blake has been long multiple times, but Blake, very often scalps the market, and he does great at it. But I'm not a scalper. So, if I'm looking for a trade that fits my time horizon, definitely it would be a short in the USDMXN. Okay, not yet, of course. Either if we retest this channel when the risk reward is going to be appealing, or if we break down, so you can, I can play the breakdown. Blake, why? Okay, another question about USD CAD. Constantinos says that, of course, there are mountains. Indeed, of course. Can you please cover USDMXN, USD ZAR, and gold? Okay, I hadn't read the question yet, but as it seems, I did all of that. How do you see Euro Pound from here? Yes, I can tell you that I hadn't seen Blake's analysis. There is another question for copper, which I already covered. So from what I see today, I covered all the questions without even having seen them. Okay, now, about Euro Pound. I saw Blake's analysis and I'm 100% in agreement with him. That's what I said yesterday as well, which means what? I think that as long as we stay below this horizontal support resistance area, and that's what he had drawn on his chart as well, there is a good likelihood that we're going to test it, get rejected, move higher once again. Okay, move lower once again. Now, if we do break above that, then I will have to re-examine. But, the path of least resistance until proven otherwise remains, looking lower, with the next objective being at 85 cents. Okay, so from a risk-reward perspective, being short here with a stop loss, let's say, of roughly 50 pips and looking for 100 pips towards 85 looks, a decent proposition, in my opinion. It's not that I feel very strongly about it, so I'm not going to be taking the trade. But if for some reason you have a strong bias and you like it to the downside, I think that there is an appealing opportunity here. So if your bias is short, I think that this is a decent place to play it. Okay, I just did Euro Pound, and there's another question about Kiwi. I showed Kiwi before. I have absolutely no problem showing it again. I have no bias currently in Kiwi, and the reason is quite simple, because Kiwi is in the middle of this triangle. You can see it here with the two red trend lines. So, you know, gun to my head, perhaps something like this. But I wouldn't be surprised at all if we just break down from here and just continue. Okay, so what matters is what are the significant levels to watch, and the significant levels to watch are 67 cents. In my opinion, a break below 67 cents is going to bring more weakness. It's going to probably accelerate weakness. Alternatively, a break above like 69.40, 69.30, 69.50, that area, that should produce more upside. First target would be 7.5 cents. Second target would be almost at 72 cents. Anything in between those two levels, 67 cents and 69, let's say 30, 40, in my opinion, we are in no man's land. So, you know, absolutely nothing to do here as long as we remain below these levels. It's like, you know, dicing a coin, right? I mean, it can go whichever way. Coach, do we have an interview today? Dale? Okay, I guess he's away from keyboard. Let me see if I missed. Sorry, the US wants the Japanese to weaken the yen. Isn't Trump pretty much demanding weaker USD against all majors? Why would he want higher USD yen? Listen, my opinion about that is actually that, as you've seen, there is absolutely a strong alliance between Japan and the US. And this is one of the main reasons why the US is looking the other way, having to do with the Japanese yen, because Japan is helping a lot the US. I mean, for example, Japan is bidding up stocks, you know, US stocks, and investing quite a lot of money in the US. And on the other hand, from a military standpoint, you know, it's an alliance in the area against China. So I would really not expect that the US would openly push against Japanese policies. I think that, you know, the two countries have very close ties, and whatever issues they have with those things, they just, you know, settle them over the phone. So I wouldn't be expecting any pushback in Japanese monetary policies, because let's be very honest, if I personally had to choose between China and Japan, of who is the biggest currency manipulator, I think there is no argument to be made. That's Japan. As simple as that. Okay. But it's not an accident that, you know, they haven't been targeted, especially lately, for that. And as I said, I don't expect that to happen anytime soon. Not as long as the relations remain, you know, what they are, and the balance is, you know, what it currently is. Coach, are you here? 1, 2, Houston pinging Dale. Okay, so let's see. Yeah, a brief word about cryptos before we're done. Bitcoin still above this channel. So you know, have a look at it as a potential, you know, long against this channel. I think there is still the possibility for more upside, perhaps towards the 61.8. Dale?
Yes, sir.
Okay, sorry, I was pinging you. I didn't know if we have an interview. And
yes, we do.
And the same with Ethereum. Okay, who do we have today?
Mickey Fulp, the mercenary geologist, you know, wants to talk about the metals and copper has some very good fundamental stuff. Mickey.
Oh, okay. That's going to be interesting.
He's a geologist, so I mean, you're getting. I hate to use a pun, but bottom up from ground level analysis because he knows the ground, right?
Absolutely. Absolutely.
Okay. All right,
Perfect.
buddy.
So is he in the house?
Yeah. We're ready to go.
I think I covered everything and all the questions. So everybody, I wish everybody a nice weekend. And by the way, happy new month.
Yeah.
So we finally entered springtime. Officially not yet, but March is the first month of spring.
Yeah.
So let's.
There's a saying in March goes out like a lion. Because it could be wild weather, right before
that's
spring.
Very true.
But
that's very true. It's a crazy month. Yeah, you can have any kind of weather.
So I mean, let's all be lions in March, and lions are out there. They hunt in a pride, group like what we have, and let's feast in March. What do you think?
Absolutely fine by me.
Okay. All right, buddy. All right, so thank you, Steve. Have a great weekend. Enjoy your new sled, and see you on Monday. Joey's thanking you, buddy, and hair is roaring like a lion. And Mickey, thank you for coming back. I'm going to make you a panelist because I'm going to be showing your website. So we'll just hear your voice, and then I'll show my screen.
Hello.
Hi, Mickey. How are you?
I'm well, Dale. How are you?
Good. Thanks for your patience and coming back to join us, and very timely time to be talking about the metals. I mean, we had a tremendous run in gold from 1160 up towards 1340 before this pullback. Even silver had a nice run. Why don't we start there, Mickey? This pullback that we're getting in the metals, to you and from what you're hearing and thinking, just a correction in a bull market? Is that the way you're viewing it?
I'm viewing it as a test of resistance.
Okay.
We went up to intraday 1345 somewhere. I think February 19th. And, I went on some program, I can't remember which one because I do quite a few, and said we were going to test 1300 again. And it's critical that we do not go below that resistance. Now, I'm a supply demand fundamentals sort of guy, but you guys that do technical analysis, you know what I'm talking about. So today it's at 1305. I think this is a test.
So it could be a good buying opportunity here, and then if we start closing negatively, getting, weekly closes or so back under 1300, you get out of the way if you're trying to position yourself on the long side of gold.
Well, I would say so, but bear in mind, I'm a hoarder of gold. I'm not a trader. I don't consider it a speculation or an investment. It's a safe haven. So that's where I'm coming from. But, it was up 4.5% this year so far. We're at a 1.5% gain right now. If you do the math from the low in late September of 1182, that's a 13.5% gain for gold market. So,
and the shares finally kicked in once gold started trading above 1300, Mickey. Is that because that's production costs for a lot of these miners, and until a lot of them weren't doing much until 1300 was taken out on the upside, and then they really started to kick in and perform?
Well, I really don't think so. I think it's the speculative markets.
Okay.
The major gold miners are not profitable at $1,300 or $1,250 or $1,400. They're just not profitable entities because they keep trying to grow. And we've seen that now with the proposed mega merger of Goldcorp, Newmont, and now Barrick has a hostile offer out for Newmont. If you take 2 bad companies or 3 bad companies and you put them together, it's not going to make a good company. So I'm
right.
quite outspoken about that idea.
I want to talk about it then, Mickey, because what do you think the rationale is for it? Is for we haven't seen anything like this since I don't know who took over Homestake mining, which was around for over 100 years. Barrick did it. Okay, so is it because they're looking for economies of scale, or this will reduce operation costs, or what are they saying are their reasons, and what do you think are really the reasons?
Well, they say that it makes them more efficient, reduce redundancies, lower operating costs by the elimination of G&A and redundancies in a combined company, get leaner and meaner, et cetera. Look at Barrick. 5 or 6 years ago, it diverged itself of all its African assets. And what's it done in the last 3 months? Well, it went in and bought Randgold, which is an African-based company. Now, that said, Randgold is, of the 7 major gold miners that I have studied in extensive research, Randgold is the best of the lot. It's the only one that's profitable.
What's the symbol on that, Mick?
It trades in SDRs, so off the top of my head, I can't remember. It's a South African-based company that you can buy through SDRs in the U.S. But here's the bottom line. Here's the problem. The gold mining industry, and really the mining industry as a whole, but let's focus on gold because most of the other miners have multiple revenue streams from different metals. It's easy to analyze gold deposits or gold companies because that's basically all they produce. Maybe a little copper, maybe a little silver. But for about the last 25 years, they have adopted what I call a Wall Street style of capitalism, which is driven by quarterly revenues and quarterly earnings. So it's a growth philosophy, and that is not compatible with the mining industry. The mining industry is a value industry, not a growth industry. You are constantly depleting your reserves, so you're faced with replacing those reserves all the time. And you look at the majors, Barrick, Goldcorp.
It's worse than being a farmer.
Yeah, and so the way that they have managed their business is growth for growth's sake, and that's not the way you build a capital-intensive company. You build that company on margin. It's all about the margin, your all-in cost of production, and that includes everything from initial capex to sustaining capital to G&A to dividends at all, etc. They have not been profitable since 2003. We studied them, and that's because they're trying to produce more and more ounces per year, or even sustain their production, and these major gold companies can't do that. Newmont went from 8.9 million ounces in 2005, and what are they going to produce this year? 2018, around 4.5 million ounces. Barrick, the same story. It's not a sustaining business model.
They're producing half as much right now.
Right. So now
it almost makes me think, like, why mess around with miners? Because what the miners are saying, there is a supply issue of new supply coming online if the majors can't do it. So, they may have trouble as a business, but it's almost more bullish for the bullion than it is for the miners. Do you agree with me?
Well, absolutely. But here's the sweet spot in this industry. You should not invest in gold mining companies. You should speculate in junior gold explorers, because that's where the highest reward is balanced by high risk, but the lowest risk. So as capitalists, venture capitalists, entrepreneurs, whatever you want to call us, speculators, gamblers, we're looking for the highest return with the least risk. And for me, that's the junior gold explorers. That's what I do. In fact, I'm going to Toronto tomorrow, and believe me, it's not spring there yet. It's going to be about 2 or 3 degrees Fahrenheit. But I'm giving a talk on Sunday at the PDAC, which is the world's largest exploration and mining convention. There'll be 25,000 people there. I'm giving a talk is why I don't own mining companies, and it has to do with this idea that they're not profitable. You know, the Newmont and Barrick, they've all over the last 15 years, they have done equity raises and gone into debt to pay dividends to shareholders.
So they've been trying. Yeah, they've been trying the financial engineering, the tech companies, and you know, and it works for, you know, it may work for Amazon and Microsoft and companies like that, but can't work for the mining industry. So they tried to put on you know, a high-tech look to what's an old age industry.
Well, and really what they've done is it's the bean counters and their financial shenanigans. So it becomes a wash, rinse, and repeat cycle where you acquire, you pay too much after 5 years. 6 years, 7 years, you come in, you write down everything, you wipe it off out of the books, and you start over. And that's the history of the gold mining companies,
you know,
over the last 15 years.
I think it's so apropos because of your background that you know, above, like, say, a financial analyst who doesn't have a geological background, would be able to understand the potential of, you know, potential gold finds by some of these exploration companies. So what kind of research do you do before you go into these exploratory gold ventures to give you confidence that there's gold there? Because you know what Mark Twain said, that a gold mine is two liars standing over a hole. So,
well,
I mean,
he actually said a mine is a hole in the ground with a liar standing beside it.
Okay. I know.
There's various versions of that, and it's quite interesting because Mark Twain's my favorite author. I'm from Missouri, and you got to show me. And I've studied and looked for this quote, and it does not exist. No doubt, he said it in one of his rants.
That's a bought it for you.
But he never wrote it down. So he spent a lot of time in the Comstock lode. He was a newspaper reporter in Virginia City, Nevada, when the Comstock lode was booming from 1862 to about 1865. Wow. He was a coward. He fled the Confederate Army and went out west, so he didn't get thrown in jail or captured by the Unionists. But anyway, it's
interesting. I brought that up. So that resonated.
But to go back to your question, I'm sorry I got off topic there a bit. I have a tendency to do that. There's 4 critical things. You need to look at the share structure of the company. You need to, and you want a tight share structure where management has skin in the game and they've paid for those shares. They haven't just been rewarded them because they put the company together.
How do you find that out? How do you find that out?
It's all on. You can go in on and. So most of these companies are listed in Toronto Venture Exchange, Toronto Stock Exchange. So you go to something called CDAR. It's the EDGAR equivalent in Canada, and you get the MD&A. You go to a website called SEDI, SEDI, and you get insider holdings and insider trading, and you ask the companies, call it CEO. So you want tight share structure with management with skin in the game. You want that management to be technical guys, either geologists or engineers, understand, like I do, what makes a good deposit. You want that management to have had experience in the sector before, significant experience with success. You know, someone that's bankrupted.
Like a McEwen?
Rob McEwen had one success.
Okay. Who was your favorite manager?
I personally think he's lived off that success since then.
Okay.
That is a gold miner, and like I say, I don't own gold mining companies. I own I'm working an order of magnitude or two down from that. So
okay, all right. So you probably have your own list after doing due diligence like this for many years of operators that have made a go out of striking gold and doing it with a good structure so that shareholders aren't, sitting there and being diluted by more and more paper hitting the market so they could finance a deal.
Well, that's true. So, and you want a good project. You want a good project with good potential, and this is where my expertise comes in. And you want that in a safe geopolitical jurisdiction. So,
okay, good. I was going to bring that up. What is in this current global environment with things that are happening? New leader in Mexico. Yes. A lot of these miners have properties in Mexico. What's happening in Latin America? What's happening in
Africa?
Africa. Yeah, everywhere. So you just stick with Canadian and North American kind of properties?
I do very little in Canada. I stick with the good old Western US of A. The U.S., parts of Mexico. I speak Spanish, so I've actually lived in Mexico.
Does a new leader, a president of Mexico, bother you at all? I know right now he's playing nice with business, but he is pretty far left. Do you worry about nationalization from this guy?
At this stage, no. I have experience in Mexico, and I can use an analogy with another country that I've worked in and lived in extensively, and that's Peru. And in about 10 years ago, they elected an avowed left-wing military general, socialist, and as soon as he got in, he went right to the middle. And if you looked at his 6 years in office, he was probably right of center most of the time.
Was that Fujimori?
No, that was post-Fujimori.
Oh,
and
Mori.
Was Humala was his name.
Okay.
Humala.
Okay. All right. So you covered all the things, and I'm going to circle back to this. But I know you wanted to talk about copper, and I've interviewed a guy, and I brought it up to you when we were Skyping each other. Yeah. That one of the reasons he's so bullish on copper is because the greenies don't want lithium in the batteries because it's so toxic, and there's going to be more copper demand. And you said that's really such a small, insignificant factor. So build the case for, I know you're very bullish, constructive copper, and we got some nice technical events that showed copper its trend changing a few months ago. So build the fundamental case for us in Dr. Copper with a PhD in economics.
Well, copper is
before you start, and I want to validate this for our viewers that are and listeners that are listening now, or watch it later. That well over, I've been interviewing you for a few years now, Mick, and a few years ago when copper was in the midst of a very severe bear market, and I thought the stock market would come apart because they say all bull markets are roofed in copper. Some of these expressions can get you in trouble. You were very constructive copper down there when it was in the low twos, and you said it was because of electricity generation. And you were one of the first that told me about that, the potential of copper when no one liked it. Now a lot more people like it. So what you saw when, as a contrarian, you're now getting some people to come around to your point of view. What makes it continue?
Well, yeah, copper hit a low in January of 2016 of about 96. That's not sustainable because production comes off, supply-demand fundamentals. We live in capitalistic markets. So that was a no-brainer. Here's the basic fundamentals of copper. The world population grows by 85 million people a year. 25% of those people still don't have electricity. So you cannot transmit electricity without copper. The big towers you see, those are big aluminum cables, but every transformer, every transforming station in the world has to have copper. So since 1900, copper has grown year over year with very few perturbations, annualized 3.4% per year. So just the fact that the world is becoming more electrified, we use a lot more electricity per capita now than we even did in 1990. And the population's growing, so that tells you copper demand is going to continue to increase. This idea that the Green New Deal or whatever the hell we might end up with is really immaterial to copper market. I don't care how many electric vehicles you put on the road in the next 10 or 20 years. It's not going to increase the demand for copper that much. True that an electric vehicle uses 10 or 20 or 30 pounds more copper, but if you do the math, that amounts to about, even if you do the most optimistic projections for electric vehicle penetration, that's only 400,000 to 500,000 tons of copper per year. So right now, coming up, we are approaching 24.5 million tons of copper a year. So that's only 6 or 7 days worth of copper production in the world that you can attribute to the new electric generation, scenario that we're looking at.
EVs, yes. Okay.
And most of it would be electric vehicles. But the important thing is construction and infrastructure and machinery and equipment use massive amounts of copper. So yeah, that's an incremental add-on if the world does, and certainly China is going with electric vehicles. I seriously doubt if I'm going to see too many on the road in my lifetime in central New Mexico, where everybody's driving an F-250 or a big SUV. I mean, we're addicted to our big gas hogs, and I don't think that's going to change.
Mick, a lot of people are very aware of, supply disruptions when it comes to oil and energy, but haven't we recently had some problems with some very large copper mines, and can't there be a supply shock in copper because some of these mines are in areas that do not have geologic, stability, with national stability and strikes and so forth? Do you see any problems coming on the production side of copper that could actually give legs to the continued advance?
Well, certainly your point's well taken there. Supply disruption is a very important part of the copper market on a yearly basis. All the banks and all the hedge fund analysts, they bake in 4% supply disruption per year. The reason the copper price staggered and did not went from 330 last June to 260 toward the end of the year was because there were no supply disruptions last year. This year already we have seen supply disruptions, although temporary, in northern Chile, which still remains the world's largest copper producer. It's in the Atacama Desert, and there's an El Nino event, and they had massive rainstorms that wiped out some production. So that's a wild card supply. Demand balance of copper on a yearly basis very, very tight. So we're talking, 4% would be trying to do the math in my head. Again, 6 or 7 days worth of supply coming off the market. That can cause the copper price to go up significantly.
Okay, Mick, so I want to wrap it. How do people go about finding out what kind of speculative exploratory stocks, gold shares that you like? Where do people subscribe to get this kind of input from an expert like you? Because most of us aren't. So, we have to rely on somebody instead of trying to learn a new skill when the window of opportunity for these things, it could be now. How do people go about finding out what your picks and your own personal choices are and recommendations for all of the mining industry that you follow?
Yeah, I'm at mercenarygeologist.com. I am prolific. In my content, I produce on average 4 or 5 pieces a week of content, videos, audios, writings. I run a free subscription service, and to get my stock picks, you need to be a free email subscriber. You can see there on the screen right below my mugshot says free subscription, click here, or on the right on the opposite side, subscribe to my musings. That's the newsletter. That's where I pick the stocks. A lot of content is available, but the stock picks are only available to free subscribers. We're also extremely active on Twitter. I have 52,400 Twitter followers, and that covers a variety of things that interest me. I'm a well-known libertarian. I'm a socially liberal and conservative economics. We say libertarians, you want the government to keep its nose out of your business, its hand out of your pocket. So I subscribe to that. I'm a sports fan. I grew up in Missouri, so I follow the St. Louis Cardinals religiously. So all that stuff comes in the Twitter feed. Earthquakes, volcanoes, we keep the whole thing going.
Okay, well, I'm subscribing right now. I don't know why I haven't. Okay.
I don't know why either. You missed we had 2 excellent stock picks last year. We got a triple on one and a double on the other. So
all right. Well, I'm not going to miss them anymore. I encourage people that are hearing us to go to Mickey's website. It's free. This guy, is a geologist. Well, why not take recommendations and at least consider things from someone who's not, just someone who said, oh, yeah, you know what, I'm interested in gold. He was interested in what was happening geologically his whole life. So, Mickey, you're my go-to guy for this, and I really appreciate you taking time to edify our community today. Good hunting, and may all of your investments have the alchemy of going from lead to gold.
May all your trades be to the upside, Dale. Thanks for your kind words. And sign up and see if you like what I say.
All right, everyone. That's Mickey Fulp at Mercenary Geologist. Is that correct? Mercenary Geo or Geologist. And you can follow him on Twitter and go to his website of the same name. Good hunting, everyone. Have a great weekend. Remember, don't just count your pips, count your blessings. And I'll see everyone on Monday. Thank you, Mickey. Adios.
Thank you, Dale.